Hello folks, you are welcome to this lecture. Today we'll be looking at session 4 of unit 1. And session 4 talk about IAS 1, presentation of financial statement. Now what is our objective? So at the end of this session, you should be able to A. Describe the main content of IAS 1, and B. Prepare and present financial statement in accordance with IAS 1. So these are the objectives we have to work with in this session. Now, IAS 1 set out overall requirements for the presentation of financial statement. It prescribes the guideline for their structure and lays out the minimum requirement for their content and disclosure. This standard prescribes the basis for presentation of all general purpose financial statements to ensure comparability both with the entity's financial statement of previous period and with the financial statement of other entities in the same industry. Now, for the general purpose or the general principles relating to the presentation of financial statement, we have the accrual basis, that financial statements should be prepared on accrual basis, in exception of where we are preparing the statement of cash flow, where you deal strictly with cash item. Then you have to ensure consistency of presentation. The methods you use should be consistent from year to year. Then we look at materiality and aggregation, that you are not supposed to aggregate figures or items unless they are minimal or they are small, that you can aggregate them aside and you have to present them. Then we have offsetting, where you have to offset a liability against an income from somewhere. The standard also talks about how you should be able to do that in circumstances where they are allowed and in scenarios where they will not be allowed. The standard talks about that. Then we have comparative information as one of the principles that must also be disclosed. Then we have the frequency of reporting, whether you are reporting monthly, you are reporting quarterly, semi-annually, or annually. You need to also ensure that those are outlined. Now, what are the components of the financial statement? Now, according to IFRS, that is IAS 1, financial statement consists of basically 5 main components. We have the statement of comprehensive income for the period. We have the statement of financial position as at the end of the period. Then we have the statement of changes in equity for the period. We have that of the statement of cash flows for the period. And notes comprising a summary of significant accounting policies and other explanatory information for the period. Now, how do you identify a financial statement? In doing so, you need to identify the name of the reporting entity. Look at whether the financial statements for a single entity for a group. Then you have to also look out for the period covered by the statement. You look at the presentation currency and then the levels of rounding up when it comes to the currency that they are working with. Now, let's look at the structure and the content of IAS 1. When we take the statement of profit or loss and other comprehensive income, this statement should realize profit or loss plus other comprehensive income. So the profit that was able to be generated or made during the period or loss plus any other comprehensive income is disclosed in this statement. And then you have the option to present as a single statement or two statements. What we mean by this is that you can prepare either a statement of profit or loss as a single and then other comprehensive income together as a single statement, or you you present the two statements of profit or loss, and then you move on to prepare the other comprehensive income, making the two. Now, when it comes to the statements of profit or loss and other comprehensive income, we look at the classification of expenses. An expense may be classified by function or by nature. So we have classification by function of expense or by nature of expenses. Then we have the other comprehensive income, and there are those that, or items that go there are items that can be reclassified to profit or loss, and those that cannot be classified. So we have the conditions: under what circumstance would you classify items that goes to OCI to profit or loss, and under what circumstance that you are not entitled, or you'll be prevented or restricted from reclassifying them to profit or loss at the end of period. Now, when we look at the statements of profit or loss and other comprehensive income, we are saying that the minimum information to be presented on the face of the financial statement, that we have the revenue, finance cost, profit or loss of associates and joint ventures. In a situation you are presenting a group account, or you have investments in other entities, you present whatever profit that is attributable to you from the associate or joint venture. We look at the pre-tax gain or loss on disposal of assets or the settlement of liabilities attributable to discounting operations. We look at the tax expenses and profit or loss. So these are basically the items that goes to the profit or loss statement of comprehensive income. Classification of expense by function. Now this is how the format is like. When you take the statement of profit or loss and other comprehensive income for the year, you are classifying the expenses based on the function. So we have the revenue, come to cost of sales, and come to your gross profit, your other income, the distribution cost. Here we are looking at the total of all these figures. The cost of sales, a lot of items come together to form your cost of sales, but we are looking at the total from the various nature, or from the various department they are coming from. Then we pick the total as cost of sales. We do that for other income, we do that for distribution, administrative, other operating expenses. Then we get your results from your operating activities, and then you come into the share of profit or loss of the associate. You come to your finance income, your finance expenses. Then the result will be from, or whatever you get will be from, financing activities. Then you come to your profit before tax, income tax expenses, and profit for the year. Now when it comes to the other comprehensive income section, we have items that will be classified to profit or loss. So we have gains on property revaluation, in a situation where you have made sales, or you are able to sell the asset that you have revalued, you can classify this revaluation gain to profit or loss. Then we have the share of gain or losses on property of revaluation of associate. They can also be reclassified to profit or loss. Then we have actuarial gains and losses on defined benefit plans. This one, the standard that talks about this is IAS 19. So if there is any gain or loss with regards to defined benefit plan, it's also reclassified to profit or loss. And then where an entity has designated that it's going to measure its equity instrument through OCI and POL, you have the option to also reclassify them. Then we have changes in credit risk of certain liabilities. So if there is a change in the credit risk, you can classify it to profit or loss. Then we have income tax relating to items that will not be reclassified. Income tax relating to items that will not be reclassified will also be sent there. Now that is the function of expense. We want to look at the nature of expense. Now when we come to nature of expense, this is how the format looks like. So we have your revenue, then we have other income, then there's changes in inventories of finished goods and work in progress. Changes in inventory of finished goods and work in progress. So we bring them line by line. Then we have work performed by the entity and capitalized. Other operating income, then raw materials and consumable used. Here you are bringing the items by nature one by one, but by function you sum all of them together to get your cost of sales or one figure that must be presented. Then we have employee benefit expenses, depreciation and amortization expenses. Then we have other expenses. This will give you your total expenses, which you will take out from your revenue and other income to get the result of operations for the period. That is by nature of function. Now let's take an example or illustration one in the model that we have. Now the illustration one talk about, they say LCM operates in retail sales. That is, it purchases merchandise from wholesalers and resells to customers. And then they have given the table which explains, or the following table present the expenses from the year 2016 according to their nature and function. So they've classified them: cost of sales, administrative expenses, then we have distributive expenses. So under each of them we have raw materials and consumables. With the raw materials and consumables, we have 18,000 going for cost of sales, 1,000 administrative expenses, then 1,000 distributive expenses. Now when you sum all these raw materials together, the totals you'll be getting is 20,000. But they fall under different segments: cost of sales, administrative and distributive expenses. Then we come to employee benefit expenses: 5,000 for sales, cost of sales, 2,000 for administrative expenses, and then 2,000 for distributive expenses, giving us a total employee benefit of 9,000. Then we have depreciation and amortization: 3,000 going for cost of sales, 1,000 administrative expenses, and 1,000 going for distributive expenses, giving us a total expense of 5,000 for depreciation and amortization. Then we have other operating expenses: 2,000 going for cost of sales, 1,000 for administrative expenses, and 6,000 for distributive expenses, giving a total of 9,000. So when you take the total expenditure under cost of sales, we are going to get 28,000. For administrative expenses, giving us 5,000, and for distributive expenses, we are going to get 10,000. Now the revenue for the year 2016 is 50,000. Now we are required, they say LCM prepares its first financial statement according to IFRS as at 31st December 2011. Now LCM decides to prepare a separate income statement, that is two statements approach. Now LCM's chief financial officer would prefer to present the items of the result of operating activities as shown below, if possible. Now in this statement, cost of sales, administrative expenses, and distribution cost would be presented excluding an allocation of depreciation and amortization. Now depreciation and amortization expense will therefore be shown as a separate line item. So we have the statement that was prepared. So revenue 50,000, cost of sales 25,000, gross profit of 25,000. Then we have administrative expenses 4,000, distributive expenses 9,000, then depreciation and amortization 5,000. The result from operation to be 7,000. Now, what are we supposed to do? We are required to assess whether this presentation of the results of operating activities in LCM separate income statement is possible. If not, we have to prepare new versions for LCM separate income statement which correspond with IFRS. And for simplification purposes, comparative figures are ignored in this example, and it is not intended to shift information to the node. So this is what we are supposed to do. Now, the separate income statement above, which has been presented by LCM, is a mixture between a presentation of expense according to their function and their nature. We have such a mixed presentation is not possible according to IFRS. So you can't mix the function and the nature of expense. So the chief financial officer can choose between the following two presentations provided that both of them are reliable and equal in terms of relevance. So each of the nature or the method you use, you will arrive at the same answer. So let's look at how the presentation would be when we are looking at the function of expense method. Now when we take the function of expense method, revenue is still revenue, 50,000. So we are adding everything up under each of the segments. We want to take cost of sales as a department on its own. So the total cost of sales, which is made up of raw materials consumed, we take the employee benefit expense and all those ones. The total of 28,000 is what must be taken out as the total cost of sales, giving us a gross profit of 22,000. So if you have a gross profit of 22,000 here, then we take the total administrative expenses, and this total administrative expenses we have I think 3,000, 1,000 and 1,000, giving us the 5,000. Then when it comes to the distributive expenses, we are taking the total, which is 10,000. So we take these two expenses, the administrative expense and distributive expense, from the gross profit, which will give us result of operating activities to be 7,000. So this is what we are getting as the operating activities. So this is how we present the function of expense method. They all function as cost of sales. So everything that falls under cost of sales, we sum them up. The same applies to administrative expenses and then the distribution cost. Now, the nature of expense method. Here, we take the revenue, but we are going to take the total of what is the nature of the expense we are doing. So if we take raw materials of consumables, we are going to sum up all the raw materials and the cost of sales and the administrative expenses and the distribution cost. So the total of these is 20,000. When you come to employee benefit, you sum the total employee benefit and the cost of sales, administrative and distribution, giving us 9,000. You do the same thing for amortization expenses, and then you do the same for other operating expenses. So when you take that, you still arrive at a result of 7,000 Ghana cedis, which is the same as the one we have under the function of expense method. So this is how you present it. You just have to know the distinction between the two. When you talk about function of expense and nature of expense, then you present it under that heading. Now, what are some of the disclosure requirements of accounting policies when it comes to IAS 1? Now, you say an entity shall disclose in summary if significant accounting policies or its significant accounting policies. Now, the management basis used in preparing the financial statement has to be disclosed. And then we have the other accounting policies used that are relevant to an understanding of the financial statement. So if you use any other accounting policies that are relevant for the other users who understand the financial statement, you have to disclose that. Now, the entity is also required to disclose information about the assumptions it makes about the future, other major sources of estimation and certainty at the end of the reporting period. So if you make use of any assumptions, and this assumption is about the future, and then it's about also a major source of estimation, and there is uncertainty involved in here, it is required that you disclose this in the note to help users advise themselves in taking decisions that they have to take at the end of the day. We have other forms of disclosures, and then as an entity, you shall also disclose in the note the amount of dividend proposed or declared before the financial statement was authorized for issue, but not recognized as a distribution to owners during the period, and the related amount per share. So if a dividend has been proposed or declared before the financial statement was authorized, but this has not been recognized as a distribution to owners, as shareholders during the period, then this has to be disclosed in the note, and you have to also state the amount of dividend per share. And then you also have to disclose the amount of any cumulative preference dividend not recognized. So if you have preference shareholders that subscribe to the cumulative preference, and there's a dividend that has not been recognized, you have to also disclose this in the financial statement or as a note to the financial statement. So in summary, we've discussed the content of IAS 1, how to prepare the financial statement in accordance with IAS 1, and we look at the function of expense method, we look at the nature of expense method, we've also looked at the example, and we look at the disclosure requirement. Kindly go through the model, solve more questions to get an understanding of IAS 1. Thank you very much, and do have a fruitful day.